Most traders want to be the first to cash top and cash bottom, but they don't know how to go about this. In this video, I'll be showing you exactly how you can be the first to cash the top and the bottom of any trade in any market scenario. You are wondering, what is the top? The top simply means that you will be the first to sell, which means prices at the top here. You will be the first to cash this trade to the downside. And the bottom means that you will be the first to be in this buy movement that bought all the way to this upside. So many have made several attempts, being able to be the first to cash a trade entry, but that was not possible for them. In this video, I'll be showing you two ways you can do that. Using your Bollinger Band, which is the upper Bollinger Band or the lower Bollinger Band. What exactly do we want to do? We want to be the first to cash this first move that happens in this market. So how do we cash this move? How do we become the first to cash this particular move that occur in this price scenario? So to do that, let us begin with how we can use our moving average, how we can use our Bollinger Band indicator. So looking at my chart, you realize that price has been moving upward, price has been bullish, and if you observe critically, you will now see that price is at the upper Bollinger Band. So the first condition using the Bollinger Band is that you want to see price trending around the upper Bollinger Band. That is for a buy, for a sell entry. Then for a buy, you want to see price trending around the lower Bollinger Band. So let's begin with a buy first. This is applicable to any of the pairs. You can do this on Euro USD, GBP, gold, whatever, but we are using this book as a case study. Okay, so let's go right in. So now price has been trending, and once you see price trending around the upper Bollinger Band, you will not make any entry. What is the next thing you want to see? You want to see price pull back into the middle. Sorry, you want to see price pull back, yes, towards inside of the band, which is all of this zone. So here now, you can see that price has been trending here. You realize that price has been trending here, and then suddenly price pull back into this zone. So once you get the pullback of price from that zone, all you need to do, you move to your 15-minute time frame. Follow me carefully and see how this works. You move to your 15-minute time frame. So on your 15-minute time frame, you will now begin to analyze the structure of the market. And here, look at what we are having now. In this scenario, we are having this lower, we are having this higher low, right? So let's do it this way, higher high. Sorry about that. Alright, so let's have it this way. We are having this lower high, higher low. Let's say we have this higher high, right? And then look at here now. This is our new higher low, and then we have this new higher high. So on our 15 minutes, we have identified our structural point correctly. Now look at what happened after all of this has been identified. This is our last structural point. So I'm going to mark the last structural point which we have identified. So here is our last structural point that we have identified. So now that we have identified that last structural point, what is the next thing we want to see? Having identified that last structural point here, we want to see price break this structural point. And look at what happened. Let's say we have this higher high, right? And then higher low, higher high. So look at what happened. Price now came all the way down and break this structural point. So automatically here we have a BOS. Remember, we begin from a higher time frame. So now we are having a BOS, a break of structure on this 50-minute time frame. So now that structure has been broken on this 50-minute time frame, what is the next thing we are going to do? Now, it is this move that came from here all the way to this point that breaks structure. So that is the move that breaks structure, right? All of this move is the move that breaks structure, that pull all this way down. So we are going to identify the other block in this move that break structure. And if you look at it critically, the last bullish candle that breaks structure is this particular candle. So this last spike is the candle, is the other block that break the structure. So what will I do? I will now mark that other block as my point of interest. So follow me carefully and see what I'm going to do. That is the other block. Perfect. So I've marked this other block as my point of interest. So what do I want to see now? I will want to see price after it has break structure to the downside. Now I want to see price do what? I want to see price pull back into that other block. And of course you can see here, price pull back into that other block and then continue to the downside. So you can see how this is working perfectly well. So here, this is my entry, and up here is my stop loss. That is my stop loss. And you can see how this trade has been playing out very, very well. So this is exactly how you can catch the top in any market scenario, regardless of the market condition. Now here, look at this point. In a buy scenario, please follow this carefully. This works in all situations. First, what is the first thing we want to see? We want to see price pull back to our trending around the lower Bollinger Band, showing us that this is an exhaustion. Now you can see price trending around the lower Bollinger Band, right? Now, after you have seen that, we can even have this on a 1 hour time frame. Look at this. After we have seen that price is trending there, what do we need to do? We now identify our structural point. This is our lower high. This is another lower high. This is a lower low. This is a lower low. This is a lower high. This is a lower low. This is, okay, this is a lower low. Now, what is the next thing? We now see that price break structure here. This lower high was broken by this price that went up. So what do we do? I'm going to mark the break of structure now. This point was broken. That structural point has been broken by that price. So what do we want to see? Price already came, do this, came down. And then the next thing that we saw was that price push here and break structure to the upside. So here now we have a break of structure. So the next question is, what is the other block that break structure? The last bearish candle before this up move is the other block that breaks structure. Again, we came this way. Price was doing this and was doing this. And then subsequently, price take a turn and then move to the upside and give us a break of structure here. When we had this break of structure, the next thing we need to do is for us to identify the other block that breaks structure. So In this zone, we have this last bearish candle that breaks structure. So what do? We are going to mark that last bearish candle, which is our order block. So here is the order block, perfectly well. We have marked the last bearish candle. And if you observe very well, we also have an imbalance here. You can see from here to here is an imbalance. So all of these are point of interest. Why? Because this price can choose to pull back, fill into only this balance and return without coming to the other block. But in this case, look at what happened. Price now went up, price went up, price returned back, retests. Remember, this is the move. And then here now, we had this break of structure to the upside. And after that break of structure, look at what happened. Price now return into this other block. Then immediately you have this bullish candle, you will make your buy, and then you see that push. That is how we begin that movement that lasted all the way to where we are now. And you can see that the same pattern repeated itself, and then we get into this cell that is up and running now, right? So this is how exactly you can catch the top and the bottom. You can be the first to catch the top and the bottom. Think I saw one that should be boom 500, right? Yeah, let's look at this on boom 500. I mark all of these zones because I actually took trades in those zones. So let's look at this. This is a higher time frame. This is 1 hour time frame. So let's look at how this plays out. Now follow carefully and see what happens here. In this scenario, there is scenario you will not get a break of structure clearly on a higher time frame. Unlike in this case, you can see that we don't really have a structural point, but we see price extremely outside of the upper Bollinger Band. Just as you can see here, see price went outside of the upper Bollinger Band completely. So with that, we are now expecting price to return into the band, and true to it, price return back into, from up here, price return back into the band. So because we don't have a clearer view of structure on a higher time frame, anytime you have this type of movement, if there is no correct structural point for you to identify, move to the lower time frame. So we are going to 15 minutes to see if we can get this clearly. Okay, so this is the zone. Yeah, this is the zone on our 15-minute time frame. So here now, look at the zones here. So we have this movement, price went up, okay, price came down, price push up, right? And then when price push up, look at this now, price break all the way to this point. So automatically, there is a change of character, change of price movement in this zone. So what do we do? Inside of this leg that move all the way to this point, we want to find our point of interest. So remember, our point of interest can be another block. It can be a smart money cube. Okay? So it can be any of those things. So in this scenario, let's look at what we are having. So in this place, we are having a smart money cube. We have this particular smart money cube here. Beautifully well. So you can see that candle. That is a smart money cube. Perfect. So we have this smart money cube up there. Okay. That is the only smart money cube we're having. Now, look at the next thing that happened. After that smart money cube that we have marked, and of course, there is another block here too. This is another block. What happened? We want to now see price pull back into this zone or to this other block. Then look at what happened. Price came back a pin of it tap into this smart money cube and then got rejected. So if you were here, this is your entry. And of course, you can see that how price moves. So you can either wait for price to break out of this trend line for you to sell, or you use this candle formation and then you sell. And afterwards, you can see the outcome ever since price has been moving down. So after that, you have another, this automatically becomes our point of interest for another entry. And look at what happened again. You can see how price came all the way to this zone, went back again into this other block, give us another entry, and then keep moving to the downside. So you can see this can be going on and on and on and on, right? So this is exactly how you can take advantage of this particular trading style. Look at this. Here now we have another one. Let's check it on the 30 minutes and see. We'll have a, you see that move all the way to the downside. Then look at this point here, this particular point, that other block here. You can see price came down, returned back into it, and then you see that move to the downside. So this is exactly how you can catch your top and your bottom in a professional way. Now, if you are not, this is how to catch top and bottom. This is a complete reversal trade. And remember, I always say that avoid reversal trade, because reversal trade are zones of price manipulation. And that is why I always advise that while you are learning, avoid taking reversal trade. But if you have mastered it, just the way I just explained, you can go ahead henceforth to begin to take your reversal trade. Now you can use the additional confirmations for your entry, like using the divergence, which is with the use of, which is now the use of your TDI indicator. So you can actually use your divergence to confirm your entry as far as the TDI is concerned. We have done that before. And if you want us to explain how you can combine the divergence with this particular method, please indicate in the comment section and I will still go ahead to do that, how you can use your divergence to confirm this particular entry. And if you are not able to do this, remember, you can always wait for price to close below the middle Bollinger Band so you can determine your end. So thank you for watching. Thank you for your support. Thank you for subscribing. And if you are yet to subscribe to the channel, what are you waiting for? Go ahead, smash the subscribe button so you'll be the first to get notified when we upload our next video. Thank you and see you in the subsequent video.